The upcoming agreement between India and the United States is expected to act as a catalyst for unprecedented opportunities for farmers, medium and small and micro enterprises, that's MSMEs, also skilled workers, helping to create jobs and scale exports in manufacturing, services and technology segments. Moreover, it will facilitate technology collaboration with the U.S. partners in key sectors. The Commerce Minister Piyush Goyal said that India and the United States will be issuing a joint statement as soon as the final understanding of the deal is inked and technical details are finalized.
Agreement between the United States and India has brought down tariffs on Indian exports to 18%. Agreement is expected to position India to export competitive products globally while attracting technology transfers that could turbocharge domestic manufacturing and innovation.
I can assure 140 crore brothers and sisters that this is a deal that will make every Indian proud, that will protect the interest of every Indian and provide huge opportunities for all the people of India and will protect the sensitive sectors, the interests of our agriculture and our dairy sectors in full respect.
The agreement opens up export opportunities, especially for businesses with orders deferred due to high cost. Textiles and apparel are widely seen as the biggest beneficiaries of the pact. The US accounts for nearly 28% of India's total textile exports, making it the single largest destination for Indian manufacturers. More than half of India's textile and apparel imports are also linked to US cotton, underscoring deep trade integration. A reduction in tariffs narrows the pricing gap and supports large exporters supplying US retailers in mid-value categories. Companies with higher US exposure are likely to see faster volume recovery and improved pricing power. In chemicals, particularly specialty chemicals and intermediates, exports are governed by long-term contracts and stringent compliance norms. While demand is less sensitive to short-term price swings, tariffs directly impact net realizations. The tariff cut strengthens India's position in US supply chains, looking to diversify under China Plus One strategies. Key beneficiaries include UPL, 20 to 25% US exposure, SRF, 20%, and Jubilant Ignivia, 9%. Other potential gainers include Aarti Industries, PI Industries, Atul Naveen Fluorine International, Deepak Nitrite, Vinati Organics, Alkyl Amines Chemicals, and Gujarat Fluorochemicals. The seafood sector is another key beneficiary, with the US remaining a critical market for Indian exporters, particularly shrimp and frozen foods. Lower tariffs are expected to reduce landed costs, aiding demand recovery and improving earnings visibility. India's seafood exports to the United States are expected to recover after months of decline. Engineering goods form the largest share of India's merchandise exports to the US, spanning industrial machinery, electrical equipment, and capital goods. Lower tariffs improve India's competitiveness versus East Asian suppliers, especially in contract renewals and incremental orders.
140 crore Indians are celebrating a trade deal which is under final stages of detailing between the negotiating teams of both countries. We will be shortly issuing a joint statement by both countries along with the details which we will be shortly inking between the United States of America and India.
The tariff cut is expected to expand market access for Indian agricultural products and processed goods, strengthen the Make in India and Design in India initiatives by expanding global footprints. Fuzail Ahmed reports for DD India.